back to my Daily Dose with Tim, everybody. Today is Season 2, Episode 33. Ooh, something is happening to my camera right here. This is weird. It all of a sudden zoomed in. So, I'm hoping that you guys can see me okay. You can hear me just fine as well. Today, we're going to continue with the 5 factors that determine your credit score for you. And so, it's also, incidentally, part 3 of the same topic as well. We've already gone through the first 2 days already, and the first one being payment history. And yesterday, we talked about one of my favorite factors to debunk the demyth, which is utilization rate. So a lot of us, we just call it amounts owed. However, really it is the percentage of what kind of outstanding balances that you carry against the allowable limit that you have on a per account basis. So today, I'm actually going to cover 2 more with you. Why 2 more? Because these 2, in my opinion, are actually fairly easy and straightforward to understand. So the first one we're going to talk about is your length of the credit history. So that typically means on a per account basis, how long have you had that account for? And so this is also another reason why we ask you to not cancel any of your credit or loan accounts even after you are done paying for it in full. Because the longer you've held on to your accounts, the better it can actually impact your credit score. Why? Think about it. Always think about it from the lender's perspective. When the lenders want to lend you money, they also want to know that you have the ability to commit. And it's okay because they can actually go back to your payment history now to determine not just how long you've been having this account for, but at the same time, whether or not you've actually been debt servicing properly as expected, or rather as previously agreed upon, meaning are you actually keeping your promises? And the other thing is, as we all know, especially if you're in a relationship, there's a C word that we're looking for here, is commitment. How long have you been able to commit to one account without messing it up? So length of history is one of the factors. And to be really honest though, this is one I think it was yesterday's episode or the day before. You guys probably saw some comments from Colby Turner as well. Colby is actually one of our mortgage brokers that we've been working with for years now, and he's based out of Vancouver, BC. So if you want to get in touch with Colby to help you out, especially if you're in Canada, make sure you contact him as well. So technically, he's already spilled the beans for me, but I still want to go through every single factor as well, because I understand that we all learn differently. A lot of you guys learn very quickly by just reading something. A lot of you want to hear people explain it or even put their own spin on it, tell you a few stories, and a lot of you guys just need to watch something. So that's totally cool too. I mean, I prefer to actually watch somebody teach something. I'm very much a I need all sense to be turned on kind of learner, because that is how I retain information the fastest, especially when there's somebody guiding me to do it at the same time. So that is the third factor, which is the length of your credit history on a per account basis. And the fourth one is what we would call, you're noticing me going back and forth a little bit simply because this camera really tripped me up just earlier. So I feel like I'm not in the frame, so I'll probably find out when I come back and watch the video myself as well. Now, if I'm completely out of frame, then bear with me. Just for this one episode, I'll make sure that I pre-test it tomorrow again. Don't know what happened. Now, the fourth factor here is what we call new credits, meaning how many times your credit is pulled. Now, I think I alluded to this already a couple of days ago. The main difference is that sometimes people can pull your credit score. For example, when you're applying for a car loan, for a mortgage, for a new line of credit, for a new HELOC, for a new credit card, that kind of thing. So, or maybe, again, you want to go to Best Buy, buy yourself a new computer, either for work, for your home business, or for school. that is considered usually a hard pull, meaning somebody else is actually checking your credit score, your credit history to determine whether or not you are credit worthy. Now, the other side of that, as opposed to a hard pull, get your mind out of the gutter, some of you, as opposed to a hard pull, we're talking about soft pulls. Soft pulls basically means when you pull your own credit score. And so in Canada and the US, there are so many different sources that you can pull. And if you remember me telling you this a couple of days ago, there are two main credit bureaus right here in North America. The first one is TransUnion, the other one is Equifax. So when you go onto those two companies' platforms, meaning those two credit bureaus' platforms, you're able to pay a fee and get access to your credit score and your credit report. And when you're going through your report and there's anything that you need to dispute, meaning, for example, I already paid down that car loan 2-3 years ago. How come it's still showing on my report? Sometimes it's not a big deal as long as there's no delinquency or false information that is still in your credit report, because a lot of times they just kind of leave it there. Sometimes these creditors, they don't always report the fact that you've already finished paying them. So if you're diligent, yes, you can definitely contact the credit bureaus. They usually have a form that you can download and you can dispute that and they will have it removed. Usually the step that you will have to take is, for example, if you had a car loan with BMW and you finished paying for that a year ago and yet it's still showing up on your credit report, now you might have to call up BMW Financing or whoever you financed it through and then get the letter stating the fact that you have already paid your loan in full. And you take that letter along with your dispute form that you've downloaded from either TransUnion or Equifax, and you send it in and make sure you follow up maybe about a month to two later to make sure that it is not there anymore. Okay, so now that being said, it doesn't mean that you have to pay money for it, because right now there's so many different sources. In fact, there was a Canadian government initiative to partner up with a lot of the major banks as well as certified lenders that you can actually pull your credit scores and credit report directly on their platform. So as of today, I'm just gonna say, as of today, and I'm looking at October 28th, the year 2020, and as of today, you can actually go onto, if you bank with, for example, Scotiabank, you are able to access your credit report and credit score there. If you have a Capital One credit card account, you can usually pull your credit report there as well. And if you don't have any of those, you can actually go onto creditkarma.ca or borrowwell.com. So I'm gonna put all these links in the comment section. So whichever serves you better. I mean, if you prefer to pay $23.95 and go to equifax.ca, that's totally your call, okay? And I don't remember how much it would cost for you guys, my American friends. However, my point is there's so many different other avenues now where you can actually obtain your credit score and credit report for free. So why pay for it? And so when you do it yourself, that once again is what we call a soft pull. It does not affect your credit score negatively. Why is it like that? I don't know. I mean, this is the way I've always been taught, and this is the way I've been told to stay true as well. And it sort of makes sense if you think about it, because when you pull your own credit score and your own credit report, there is a sense of self-check and self-reflection. And this is why when you're only checking up on yourself, just like when you're logging in to check up your bank account balance, you don't have to pay a fee. However, a lot of the times, if you want to do transactions, then you got to pay a fee as well. Now, that being said though, one of the things that I have been informed, and you need to remember this, not sure, for example, if you're in the market to buy a new vehicle in the next little while here. However, every time you go and shop for a new vehicle, for example, remember what they usually do. They need to get your credit card as well as your driver's license. And that way, you are liable for any sort of tickets that you might possibly get while you're on that test drive. However, the thing is, A lot of the times what they're doing is while you're on that test drive, they are actually pulling your credit score and credit report. That's what I've been told, so I'm just passing that information on, and I've actually seen this happen. So for those of you who might be looking to shop for a new vehicle and you're going out for test drives, you make sure that when you hand over your driver's license as well as a credit card for them to keep on file, you let them know, please do not pull my credit score. And more often than not these days, actually, they will ask you to sign a form. Make sure you read the fine print. And if it anywhere in there it says that they will be pulling your credit, let them know you don't want to yet. Think about it. Why are they pulling your credit? Because they want to make sure that you can actually get access to lending, whether or not you're going to finance or lease the vehicle by the time you come back. Okay, so that is one of the things that you might want to pay attention to. And for those of you who were in the market test driving just in the last 3 to 6 months, even the last however many years now at this point, when you check your own credit report under the new credit or credit inquiries, a lot of times what they're called, section, you might actually be able to see that the dealership that you went for a test drive actually pulled your credit and you don't even remember authorizing it. So I just want to make sure that you guys understand that. So that is the main difference between a hard pull and a soft pull. So the point is, there are two more factors out of the 5. So we've covered 4 already. Number 1 is your payment history. Number 2 is amounts owed or utilization rate. Today, we covered length of the history or length of the account. And the 4th factor we just spoke about is hard pull versus soft pull. Those are, I think, pretty much street terms. Like I said, in the credit report, a lot of times they just call it credit inquiries. So that is it. Now, I want to quickly address a lot of the comments that I've been getting. I know some of you guys actually put it in the comment section. A lot of you guys messaged me in private and saying that, oh my God, that whole utilization rate section yesterday blew your mind, and it completely is the opposite of everything that you've been taught or that you think you know to be true. And once again, that is the power of education. I remember when I first learned about this, I was really thinking to myself, oh man, I have no idea now how many times before financial education came into my life that I canceled credit cards or I called and voluntarily decreased my card limit. Why? Because I thought I don't need the temptation. And this is something that we spoke about yesterday as well when we were talking about utilization rate. I don't know about you, however, I have never personally seen a credit card fly out of a wallet or a purse and swipe itself. It's always about your views and your relationship with how you see money as a tool and how you utilize it. Okay, so hopefully this is helping you lots, and I'm getting a lot of comments on this particular section, so I'm hoping that means you guys are enjoying it. So with that said, thank you so much for joining me again today, and please make sure that you do share these videos with the people that you know can benefit from the knowledge and experience and the content, if for nothing else, that I'm sharing with you, because I know for a fact now, and thanks to some of you who have been so supportive and you're sending me messages to say how much the information and the knowledge have been helping you, and a few of you actually have acquired investment properties and are cash flowing from it just because you plateaued and some of the things that I said help push you to the next level. So I'm super grateful for those messages. Keep them coming. And for some of you guys, when you're messaging me, because the videos usually shared in a lot of different groups, and so for those of you who are looking for where these videos are actually coming from, you can go onto facebook.com/The Tim Tai. So it's just TheTimTSai. Very straightforward. And that way you can like and follow my page. And this way, every time I produce any content, you will be the first to get notified. So thank you so much once again. I will see you back here tomorrow with the last factor, and we're going to do a couple of things to wrap this whole topic up with you. So have a great night and live well, everybody.